Hey, hi all. Namaste everyone. Good morning, a very good morning. So, before we dive into today's highly important topic, that is why the Indian rupee is falling and what it means for India, let me take a moment to welcome you to Shikara Academy, a place where all your dreams are not just trained, they are nurtured, guided, and transformed equally. So, at Shikara IAS Academy, our philosophy is very simple. Every student matters, every doubt matters, every dream matters. We are a truly student centric institute committed to building clarity, confidence, and consistency in every aspirant who walks through our doors. Whether you are just starting your journey or you are deep into preparation, we ensure that you get the right mentorship at the right time, and for that, we run some of the most structured and effective programs we have brought to you. So, one is mentorship batches, we have personalized guidance, one to one support, daily targets, accountability, tracking sheet, and we also have NCRT program running on to build your strong conceptual foundation with line by line coverage. And we also have integrated batches for group 1 and group 2. We also have an integrated batch running for UPSC plus group 1, and we have holistic UPSC 2027 foundation batch along with NCRT codes included in it. We have all the UPSC batches, a unique program designed for high performance, consistency, and your revision. So every batch is designed with a single intention to bring the best out of you, to make your preparation efficient, smart, and deeply disciplined. So I welcome you once again to Shikara AS Academy, where we don't just teach for exams, we prepare you for a lifetime of excellence. All right, now let's get into today's topic, one of the most talked about issues in the Indian economy, which is why is the Indian rupee falling and what does it mean for India. Okay, let us dive into this thing. So imagine this. We'll just see. I'm not going to throw complicated economic jargon to you. We'll break everything down in simple everyday language and with so much of relatable examples. So imagine this: you go to a shop. You go to a shop, and every month the same chocolate becomes slightly more expensive. That's exactly what happens when the rupee weakens. Everything we import become costlier. But why is this happening in 2025? Why is this happening in 2025? Why is the rupee losing value even when our economy is doing well? Okay, let's understand this. So, let's start with the basics. What is the current situation? See, from January, if you see, from January to October 2025, the Indian rupee has weakened by about 3.1% against the US dollar. See, this means if 1 US dollar earlier costed rupees 82, now it costs somewhere around 84 plus. So, but here's the twist, it's not just the dollar or rupee also fell. It's not just the dollar. Our rupee also fell. See, 15% against the euro, and 9% against British pound, and 6% against the Japanese yen. So the rupee is not just losing strength in one direction, it's losing against most global currencies. Now, here's an interesting point that we have to discuss. India's macro fundamentals, things like economic growth, inflation, foreign exchange reserves are actually very strong. And so the currency fall is not happening because in see the currency fall is not happening because India's economy is weak. It's like a student who's very talented, studies very hard, but still gets fewer marks because the exam paper was badly designed. Similarly, India is doing well, but global and financial factors are pulling the rupee down. Let's dig deeper with this, okay? So, if we have to have that sound macroeconomic fundamentals, this is important because I want to show you something surprising. The rupee is falling, but India's economic fundamentals are actually very, very solid. Let me explain each point in a simple way. If you see here, the GDP growth 7.8 percentage. GDP means the total value of everything we produce, and India is growing fast. close to 7.8 percentage, one of the highest among major economies. So this is one macroeconomic thing. And inflation trending, inflation and inflation is below RBI's target of 4%. Inflation means the rate at which prices rise. RBI wants inflation around 4%. Currently we are even lower than that, so prices are stable, which is good for us, which is a good sign for us. And currently we are even like, so prices are very stable, but we are having one more thing called current account deficit. Okay, see, current account deficit, imports minus exports is the difference. 1% is considered always safe. We are not overspending on foreign goods when it compared to what we earn from exports. So this is what current account deficit we are having now, that is 1%. So how about this foreign exchange reserves that we are having now? See, think of forex reserves as India's savings account in dollars. 700 billion is very much huge. 700 plus billion is our forex reserves now, enough to cover 11 months of imports. It's like having almost a year's emergency money in our bank, in your bank, our bank. Yes, so this is a good sign again. And if I have to talk about external debt, if I have to talk about this external debt, external debt is which is something, this means India doesn't borrow too much from foreign countries, so we have lower debt, which means less financial pressure we are facing. So overall India is doing well actually, which means the rupee is not falling due to domestic economic weakness. Then what is the issue? Why is it falling? That's where the real story begins, and we'll have to cover this up now. So see, all right, now that we'll have to decipher the real culprit. Okay, behind the falling rupee, capital outflows, this is the real culprit. Capital outflows are the real culprit. Let me explain this with a very simple example. Imagine India is like a big shopping mall. Foreign investors are the customers who walk in with dollars and spend money on Indian companies, startups, stock markets, all these things. So when many customers walk in, the mall earns more. The rupee gets stronger. But when customers start walking out, what will be going to happen? The mall becomes empty. Demand for rupee falls, and this will lead to rupee weakening. Rupee weakens. That's exactly what has happened in 2025. So net capital inflow till June 2025 is just $2.25 billion. This is extremely low, barely 0.1 percentage of GDP. See, imagine running a shop that used to earn 1 lakh and suddenly earns only 1,000. This decline hurts a lot. So likewise I would want to tell ki FDI also fell sharply, which is foreign direct investment. This is a long term investment by foreign companies. See, earlier India used to get that 40 to 45 billion every year. This year only about $1 billion has come, and this is like your main investor suddenly cutting funds. So it feels like that. So FPI outflow, if I have to talk about FPI, like foreign portfolio investors, people who invest in stock markets, bonds. See, from January to October 2025, they pulled out $16 billion, which is 1,30,000 plus crore. So it's like investors are taking their money and saying, boss, we'll come back later. It's like that. So capital flows matter more than fundamentals in the short term. Even if India is doing well, if investors take out money, the rupee will fall. The rupee will keep fall. So let's contribute. Like, let's know what are the contributing factors. Okay, external and global. Let us know about that also. See, this part will make even clearer notion. Even though India's economy is so strong, global uncertainties are forcing our investors to move their money to safer places. So One is obviously the geopolitical uncertainties that are going on, wars, global tensions, supply chain disruptions. All of this scares the investors. Investors think that better to put our money in safer currencies like US dollars, not in emerging markets. And we also have this trade tension with US, right? This is a big one. So US recently imposed 50% tariffs on some Indian products. This hurts India's trade and investor confidence. And we also have been facing this changes in visa norms, like US proposed stricter visa rules. This impacts India's IT industry, which is a major export sector. If IT faces uncertainty, investors will get nervous. We are talking about H1B visa policy changes that has been happened and that has been done by US, which has been proposed that changes really. And also we also have this global risk on risk on or risk off behavior, we say. Let me explain this simply. Risk on is nothing but investors invest in countries like India, Brazil, Indonesia. Risk off means investors rush back to US dollar, gold, US treasury bonds. So in 2025 the world is mostly in risk off mode. So this is the key term over here, risk off mode. We are in risk off mode. So they pull money out of India. Because of this, rupee gradually weakens. So this is the global storm. Even if your boat is even if your boat is strong, the sea can still be rough. This is what is happening now in India. And now let us decipher what is the role of RBI in this. Let's talk about the RBI, which is our financial keeper. See, people, RBI has so many dollars. Why doesn't it just stop the rupee from falling? Did you ever get this question? But here's the reality. RBI has not defended the rupee very aggressively this year. This is one low hanging thing that I have to tell you. From April to August, RBI used only $11 billion per month, which is average, to manage the currency. So when we compare this to earlier, if you see here, in financial 2025, RBI used to intervene at about $63 billion per month, and now it has become 11 billion. That is 6 times more. So why is RBI actually staying calm? See, RBI seems to be for allowing a natural adjustment. If they fight too hard, reserves will get exhausted, market may panic, and traders may attack the rupee more. Plus, since India has strong foreign forex reserves, like we have told, that is $700 billion, RBI knows it can step in anytime if things get too bad. So think of RBI like a parent watching a child on a cycle. Like if the child wobbles a little, the parent won't immediately hold the handle. They only help when the child is about to fall. That's exactly what RBI's notion is stand by now. So it is monitoring closely but not interfering unnecessarily. That is what I have to say. And when it comes to other adjustments like valuation adjustment or correction, we say, sometimes the rupee falls not because things are bad, but because the rupee was earlier too strong compared to other countries. See, imagine you priced your old phone at 20,000 when the market value is actually 16,000. It looked expensive, so eventually you reduce the price to match the real value. So this is what we call as correction. So similarly, the rupee was overvalued earlier, okay, compared to other emerging markets, I would say, which means the rupee looked stronger than it actually should have been. So now the market is simply adjusting to it. That's the only thing. And what is that real exchange rate? Okay, real effective exchange rate. So this, which we call as by name REER, real. It is an index of India's currency value against 40 major currencies adjusted for inflation. According to this REER, rupee is now undervalued by 4%. It is undervalued by 4%, which means the rupee is not falling because something is broken. It's adjusting towards fair value. This is like correcting an inflated price, right? So what does this mean? See, part of the fall is very natural and very healthy. It may it may get stabilized soon, but when capital flows improve, rupee may even bounce back, yes or no? So, not all rupee depreciation is bad, guys. Some of it is just a valuation adjustment, a natural market correction. So, what it means for India when it comes to opportunities and risks. See, now let's because every negative news also brings some hidden opportunities, yes or no? So, when we see opportunities at a good side, exports become let us understand how exports become cheaper. When the rupee weakens, our goods become cheaper for foreigners, so global buyers say, hey, India is selling at a good price, let's buy more. So this is a notion that would be developed. So the sectors that is going to be benefited by this is IT services, one is textile, one is agriculture, one is manufacturing and pharma. So this is like your shop offering a small discount, more customers will walk in, that's the only thing. And if we have to talk about import if you have to talk about this import substitution, when imported goods become expensive, domestic industries get a chance to grow. Okay, see, if imported electronics become costlier, more people may buy Indian made brands, right? This will help our local businesses. So this is what has to be is the issue now. So what are some risks and challenges that we may face and we are facing? At bad side, I would say is we see high cost of imports. Obviously, see, we import crude oil, we import electronics, we import machinery. If the rupee weakens, petrol becomes costlier, mobile phones get costlier, machinery becomes expensive, so this can push a bit prices up. So, and we also have foreign debt servicing cost, which is companies that borrowed in dollars will now have to repay more rupees for the same dollar. If a company borrowed if a company borrowed $1 million, earlier 1 million is equals to 82, which is 8.2 crore. Now 1 million is equal 1 million into 85 is equals to 8.5 crore now. So this is an extra loss for them, which is why this is a risk for us. And if we talk about capital outflows, if foreign investors pull money out, interest rates rise inside India. And also investor sentiment, see, a rapidly falling rupee scares, I always say it scares foreign investors, so they delay investments, obviously. So this is how I can say, see, a falling rupee is a mixed bag, guys. It is helpful for exporters, it is helpful for domestic industries, but it is harmful for importers, it is harmful for companies with foreign loans, and it can push inflation slightly up. Everything depends on how much and how fast the rupee falls. Okay, so now uh, the big question here is, a falling rupee can be an opportunity, but if the right policies are implemented. Okay, so what need to be done? See, we need to we need to improve, like India must take it easier for foreign companies to invest here. But how? See, simplify the regulations, this is a first thing, and provide stable policies, reduce unnecessary approvals, so this will build investor trust with us. And we need to maintain that stable macroeconomic framework. See, we must continue low inflation, low current account deficit, which is CAD, low external debt. So because always stability, when stability is there, investors will feel safe. And when it comes to, see, RBI should manage that volatility, right? RBI should not waste all its reserves trying to defend a particular rupee value. Instead, it has to step in only to control the panic and allow market based adjustments, and this will keep reserves strong and markets very confident. And when if we talk about this diversify export base, if India sells only to a few markets, we become vulnerable. We must diversify that to African countries, Southeast Asia, Middle East, Latin America. So this will reduce the dependency on us, and also we need to strengthen our financial markets. See, strong domestic capital markets can cushion the impact of foreign outflows. More domestic investors, that better corporate governance have been achieved, and will have stronger regulation on this. So, and also we need to improve trade relation, especially with major partners like US. Better diplomacy is always equal to low tariffs, and that will be leading to higher investor confidence. Right? India doesn't need to panic at all for this. Okay, India doesn't need to panic. It needs to be strategic. It needs to be stable, and it needs to be forward looking. So let's wrap up this by connecting all the dots. If someone asks you tomorrow why the Indian rupee is falling, you'll be able to give a complete crystal clear answers, right? So rupee is not falling, guys. Rupee is falling not because India is weak. This is the most important point. Our fundamentals like GDP growth, inflation, forex reserves are very strong. This means India is not sinking. The global ocean is so rough now. That's all. So, and also capital flows like massive outflow of foreign portfolio investment, sharp fall in FDI. This reduced the inflow of dollars. That's it. This has weakened the rupee. This is the actual reason. And think of it like less water coming into a tank. Water level will naturally fall. But yeah, and trade issues, geopolitical conflicts, US tariffs, visa changes, all of these made investors very cautious. When the world gets scared, they run to the dollar, and which is why rupee weakens. That's it. So RBI should should not aggressively defend the rupee. It should just cushion when needed. And we have spoke about REER, which is rupee is undervalued by 4%. Yeah, a weaker rupee has both good side and bad side, right? India is strong, stable, and resilient as always. The rupee's fall is mainly due to global financial pressures, not domestic mismanagement. Thank you so much, guys, for having me. Thank you so much for this. Keep learning, happy learning, happy learning.